Hello traders, The title of the video is how to combine gap trading and Fibonacci like a pro. You want to combine gap trading and Fibonacci trading. So if you want to combine gap trading and Fibonacci trading, you want to ask a very important question. Which Fibonacci level is the price likely to gap up or gap down? So with that simple question, you start discovering the Fibonacci key level that can cause the price to gap up or gap down. The regions where the price is more likely to gap up or gap down. So if you have been watching our video for some time, you can think of it for a second, and probably you have a bit of idea the Fibonacci key levels, all right, that are likely to cause the price to gap up or gap down, or level Fibonacci key level where bullish traders will be very anxious to 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 escape the bearish pressure, or bearish traders will be very anxious to escape the bullish pressure. So this is about how to combine gap trading and Fibonacci like a pro. If you want to learn more about Fibonacci trading or gap trading, go to www.dayprotraders.com. At the home page, place your cursor on the word more, scroll down in the drop-down menu until you see gap trading method. There are two web pages relating to gap trading. There's one called gap trading method, another one called gap trading mistakes. Be sure to check those web pages, all right? And also, of course, check out Fibonacci extension and other web pages relating to the Fibonacci trading. Before I forget, please subscribe to our channel today, all right? And be sure to click on the notification bell. So anytime we record a new video, you will be the first person to be notified. I would like to take this opportunity to thank all our subscribers that have been with us for years. Thank you for your faithfulness, okay, and your support, okay. So subscribe to them, it's free, and click on the notification bell. Let's get started. How to combine gap trading and Fibonacci like a pro. So I told traders, if you remember, okay, if you are not forgetting, if you are not forgetful, that the breakouts usually occur at 161.8%, 261.8%, 361.8%. Any Fibonacci extension, including the numbers 61.8, so 161.8, 261.8, 361.8, 461.8, 561.8, any Fibonacci extension, including 61.8, okay, a breakout Fibonacci key level. Haven't I said that before? Okay, now you say yes, I can hear you. All right, good. So those are the zones where the price is likely to gap up very often. Doesn't mean that definitely is going to gap up there, but watch out if you see a gap, all right, price gapping up, or you're using a software like a trading idea. This is trading idea software, and you compile for you stock that gap up. So you have a list of stock that gap up, or you do scanning, all right, and you find stock that gap up. Okay, now you can quickly apply Fibonacci extension to the prior price move. So if I have a list of stock like this, and then I see stock that gap up today, so I have all this list. So I go like this. So I apply Fibonacci extension to this price action, and now I see it, and I see. You look at this one. What is the 161.8? Can you see that? 161.8, yes. Did you see any gap there? Yes. All right, that's it. There's a gap there. The price was trying to avoid that resistance. I'll be interested to trade that one. Now, I want to share another tip with you, okay? If you compile stocks, okay, that have gap up, so you're using trading idea, whichever, or scanning software, or manually, as myself I like to do, you see them or the monthly gap up like this, and you just check out quickly, and you see that, oh, it gap up at one of the Fibonacci extension, including the number 61.8. You smile. Don't get too excited like a child. Just smile, because you don't want to get carried away and be cooked or zapped like a fly. This to make you laugh a bit, all right? So if you see that the price did something, like if you have a triangle, look at this one. If you see a triangle and a gap, it make it more interesting. I don't want you to get too excited. It make it more interesting. So all I'm saying to you, remember what I say to you. And if you make a successful trade, remember to make a donation to our website. Okay, any of our website. Okay, all right. So this price goes up from A to B. Okay, hold on, please. I want you to understand this. Okay, price goes up from point A to point B. Very interesting. This is a bullish declaration, yes or no? Now it pulled back nicely, and we see a kind of a consolidation. That will be the best scenario. Sometimes you will not see consolidation. Sometimes you just see it come down at it. In this case, consolidate in a triangle. Those are the best one. Now it start going up. As it reaches one on the Fibonacci extension, including the number 61.8, 161.8 to 61.8, it gap up there in that zone. It become very interesting gap for us, and we want to trade it. It's more likely to continue to go up more. Yeah, did it go continue to go up more? Yeah. All right. So some trader may say, how do you trade a gap then? Well, go to www.dayprotrader.com, as I say to you. Check out for that webpage, gap trading methods. All right. So that's it. That's it. This is how you combine Fibonacci trading and gap trading. So this is not only that, the price continued to go out. Look at this long, and everybody was buying like a donkey. Look at that after this pullback. So because it's quite tricky sometimes to chase it up like this if it's running so far. So a lot of traders were so happy that they have the following month. It was bearish, so they all just bought it. This is a nice setup here. Can you see that? They will highlight the high, the low, and the median line of that kind of bar. Look at the way that bearish kind of bar pull back to retest the median line of this one. Nice setup. This is what I'm talking about. TSCWSY is usual traders. It's a nice setup, beautiful setup. Now implement a top-down trading method to enter the trade after this candlestick bar is closed, the bearish one is closed. Boom! Look at that. The whole month, nobody was selling. The bearish trader disappeared. They were just pushing it. Now, if you see that, now this is another market principle I want to bring into you, because I say I'm talking more and more about market principle. I'm saying without a market principle, one cannot build a better trading system. I'm talking about it more and more and more, because I want you not to forget. So there was a triangle. That's what I'm saying. Become more interesting. The price does not go up or down for no reason. Haven't I said it before? Don't get upset here. Just to make you laugh a bit, okay? There is a target. So the target is here. That's the ultimate target. There is also a midpoint target. We don't want to dwell on it, because we think that you are somebody who understands this thing. There's a midpoint target here. You see, that's why people took some profit here. Can you see? They took some profit here. Can you see that? So if you are working with market principle, you understand why the price behaving sometimes the way it's behaving. All right, now you understand. So you understand why this is happening here. You understand why this gap is likely to take place here. Now you understand it. You understand why people were so excited to buy here. Now you understand why after this pullback to retest the top of that 161.8. So break above the 161.8, retest it like this. Did I say if? Yes, I did. If the common straight line is broken here, you are TSTWSY008 trader, implement the top-down trading method to take it like a pro again. Nice setup again here. So what I was saying earlier was that because we have a triangle, there is a target. That's the ultimate target. So you want to understand map it out. So you want to trade like a pro and know exactly what's going on, why the price is doing what the price is doing. Now you understand why they sold it here, because there is a target there. That's why they sold it here. Now you can see something. Now, now if you project it one more time, we are coming near the another midpoint target. There's another because there's an ultimate target far up there. Can you see my cursor far away up there? And there is a midpoint. We are now approaching a midpoint target somewhere in that zone now. So they are very careful now. Now, one more thing now. Here it is, my friend. So there is a target here. So this is very, very interesting video, and I hope trader will watch in full because I check how long trader watch the video. So some traders or some YouTubers, they are wasting videos. That's what I call it. They are wasting videos. So they're watching video 5 minutes and they don't learn anything at all because you can't. If the video is an essential video, you watch it only 5 minutes, you don't learn anything at all. And you can do that all over the place. It's like you have a basket of fruit and you take a bite of every fruit. You waste it. You just waste it. You didn't eat one fruit in full. Some videos like this, you have to watch them in full so you can digest everything. Now, sometimes they talk about people accent, blah, blah, blah. I watch videos that are quite difficult to understand. But because of the topic that the people are discussing, I have to go through that. It's a price I pay. So I have to go through it, go through it, go through it. This is the guy who is talking about the subjects. Recently, I have another video that I watch on YouTube. I try to do something with my Google AdSense account. They make some changes, and I'm trying to figure out how do I update my account. And I watch a video, watch it 3 times before I understand it. This is what's going on now. So the point I'm making here, enough of my blah blah blah. Don't get upset, my friend. All right. Now, you see, the first target stopped exactly at the 161.8. Can you see that? 161.8. Our first target is stopping there. All right. So people, professionals understand that this is a breakout zone. That the price has a high chance to break above the 161.8. Okay. So they say, all right, we need to be careful here because we have a target. People will start coming out here. You see, you understand what's going on? People will start coming out here at the target zone and also at the 161.8% level. And some people will try to come out. So they are careful. So they push it above. They make it gap up onto the top of the 161.8. They make it tricky for the bearish traders to sell it. And the bullish trader understood that they push it up more, you see. So it's a bit of fight here. What I have said also to traders, though any Fibonacci extension, including the number 61.8, 161.8 to 61.8, is a breakout zone, the negation of a setup in that zone is also a high probability trading setup. What do I mean by that? Usually, we expect a breakout in the 161.8, 261.8, 361.8 Fibonacci extension zone. But if a reversal is taking place in that zone, it's likely to be a very, very good reversal. That's the negation of the breakout here. More likely to go up to break a ball, but if it fails, then we are likely to see a very nice reversal. That's the negation. So you remember when you were in college, okay, you have number one. What's the negation of number one? It's -1, yes or no? So sometimes traders do not play the market both ways. So if they see it only one side, we play the market, okay? I talk about the market principle as it is below, so it will be above. We talk about that. So we see up and down. We see also from the positive and the negative. We're turning it all the time. And sometimes you will discover some new market principle. When you discover one market principle, okay, what you need to do is to turn it around, turn it upside down and see whether when we turn it upside down, will it still work for other things? or when we turn it from the left to the right, or from the top to the base, will it give us a different information? All right, this is what we are talking about here. So I hope I've said enough about how to combine gap trading and Fibonacci like a pro. All right. So if you have any question, suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. To summarize the video, very often, the financial instrument very often will gap up or gap down in the zone of 261.8, 361.8, 161.8, any Fibonacci extension, including the number 61.8. Now, because of those reasons, we can combine the gap trading with the Fibonacci trading in those zones. If one identifies, okay, a trading setup in the vicinity of 161.8% Fibonacci extension level after a gap, one must implement a different time frame trading method. So we see it at those Fibonacci extension level, a gap. Don't just buy, don't just sell. Look for a trading setup and then implement the top-down trading method that will allow you to control the trend. Another thing that I want you to remember is this. If the price goes up from A to B and then pull back in a triangle before we see the gap at those Fibonacci extension level, it makes it more interesting. You also notice that sometimes we have a negation, which means the price we will not see a breakout. If a reverse is taking place instead, it's likely to be a very good reversal. But always be careful when you are selling or you are taking a reversal trade at those Fibonacci extension level. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share with your friend on the social media. Subscribe to our YouTube channel. Our YouTube channel is Day Pro Traders. Click on the notification bell so the time we record a new video, you will be the first person to be notified. All right. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders talking about how to combine gap trading and Fibonacci like a pro. To learn more about gap trading and Fibonacci trading, go to www.dayprotraders.com. Happy to meet you all, and I will speak to you soon. Thank you for watching.